You just deposited $100 into your bank account. Right now, you probably picture it sitting quietly in a vault, safe, locked away, waiting patiently for the day you need it. But here's the honest truth. It isn't there at all. In fact, most of your money has already left the building, within minutes, and the bank did that completely on purpose. So, where did your $100 actually disappear to? The answer is far stranger than almost anyone expects. To understand it, let's slowly follow that single $100 bill. The moment you deposit it, it stops being only yours. Legally, you just handed the bank a small, quiet loan. You simply never think about it in those exact terms. In return, the bank now officially owes you $100. But it doesn't actually have to keep that money anywhere. Instead, it holds on to just a tiny little slice of it, maybe $10, sometimes even less than that. The other 90, it quietly lends right back out again. To a stranger down the road buying a used car, to a young couple buying their very first home, to a small business just opening up on your street. Your money is suddenly everywhere except inside that vault. Economists have a name for this: fractional reserve banking. It's a fancy label for a surprisingly simple trick. Keep a small fraction back, lend out all the rest. And this is exactly where things start getting wild. Remember that $90 the bank just lent out? It gets spent and deposited straight into another bank, which keeps a slice and lends the rest out again. Then that money moves again, and again, and again. Your single $100 has quietly multiplied across the system. One deposit can turn into hundreds of dollars in loans. This, right here, is how banks literally create new money. Not by printing fresh bills in some giant factory, but by lending money into existence, out of almost nothing. Take a second and really let that idea sink in. Most money today isn't paper at all. It's just numbers. Numbers on a screen, backed by nothing but a promise. So why would a bank ever bother doing all this? It all comes down to one single powerful word: interest. When you save with them, they pay you almost nothing, maybe 0.5% on your money each year. But when they lend that very same money back out, they charge 5, 10, even 20% in interest. The gap between those two numbers is the whole secret. That quiet little gap is the bank's entire real business. You lend to them cheap, they lend it expensive, and they're doing all of it using your money. Now multiply that by hundreds of millions of customers. Suddenly, you understand how banks grew so unbelievably enormous. But by now, something is probably starting to bother you. If my money has already been lent far away, how on earth do I still get it back? It's a brilliant question, and here's the simple answer. On any normal day, the whole thing works perfectly fine, because not everyone wants their money at the same moment. Some people deposit cash while others quietly withdraw theirs. That small reserve easily covers the normal daily flow. The system quietly balances itself, hour after hour after hour, and you honestly never notice any of it happening until one day something changes, and people get scared. Imagine a frightening rumor suddenly starts to spread around town. The bank is in serious trouble, people start whispering. Suddenly, everyone wants their cash out, all of it, now. But remember, that money simply isn't sitting there waiting. It's tied up in houses, cars, and other people's businesses. The bank can't call all those loans back overnight, so the line grows longer, and the panic spreads faster. This terrifying moment actually has a name: a bank run, and it can destroy a perfectly healthy bank within days. Not because the bank was actually broke or failing, but because everyone demanded their money at the exact same time. Fear itself, not the numbers, becomes the real threat. And this is honestly far from just some theory. It has happened over and over all throughout history. In the 1930s, thousands of American banks simply collapsed. Ordinary families lost everything they had ever managed to save. Desperate lines of frightened people stretched right around the block, and the money they were owed simply wasn't there. In 2008, the entire world nearly did it all again. Banks had lent recklessly on wildly risky, dangerous bets. When it all unraveled, the panic came roaring straight back. Governments scrambled desperately to stop the entire system collapsing, and in 2023 it happened again, in real time. One major bank lost billions of dollars in a single day. The trigger? Just a few messages spreading across people's phones. Depositors panicked and moved their money incredibly, shockingly fast. $40 billion vanished in just a few short hours. The bank was completely finished by the very next morning. All of it from nothing but a crisis of confidence. So now we finally reach the question you really care about. Is your money actually genuinely safe inside that bank? For the most part, yes, and here's exactly why. After the disasters of the 1930s, governments finally stepped in. They created something quietly powerful called deposit insurance, a government promise to protect your hard-earned savings. If your bank ever fails, your money is still covered, at least up to a certain fairly generous limit. In the United States, that's around $250,000. For most ordinary people, that is far more than enough. And this one single rule quietly changed absolutely everything. Because now, that blind, contagious panic makes far less sense. If you already know your money is fully protected, you don't go rushing toward the bank's front door, and if nobody rushes in to pull their cash, then the dreaded bank run never even begins. So the insurance rarely even has to actually pay out. Just knowing that it exists keeps everyone calm and steady. And that calm is exactly what keeps banks alive, because this entire enormous global system truly rests on one completely invisible, surprisingly fragile little thing. Trust, not gold, not vaults, not neat stacks of cash, just the shared belief that the whole thing actually works. Your money was never really sitting still at all. It's constantly flowing outward through the entire wider world, building homes, funding dreams, taking carefully calculated risks, doing far more quiet work than you will ever see. That's the strange, hidden truth about your friendly local bank. It isn't really a vault at all. It's an engine, quietly turning your savings into the entire economy around you. So the next time you check your account balance, just remember that number is really only a promise. And somehow, incredibly, the entire world runs on it.